In today's episode, we're going to be focusing on the Pi Cycle Top Indicator, one of the most accurate indicators in predicting the bull market top across cycles. This has been the case over the past few cycles already. Particularly last year, this Pi Cycle Top Indicator was very accurate in predicting the top, one of the very few indicators that actually did that. So in today's video, we're going to be talking about the two key levels that we're going to be watching out for going forward for Bitcoin, and we'll be talking about them in a lot more detail. So subscribe to the channel for more videos like this in the future. Like the video if you enjoy content like this going forward, and let's dive right into it. So in the last update about the Pi Cycle Top Indicator, we spoke about this orange 111-day moving average, talking about how price was going to break beyond 28k because we simply see oscillation towards the downside and upside during pre-halving years. So now that we've had that oscillation towards the downside, we broke, and now we're having an oscillation towards the upside. So essentially deviations and oscillation around this moving average. But going forward, one of the things to really focus on is that 28k is still that level that could be retested. And just notice how over time, last month, October 16th, this moving average represented 28k almost exactly, whereas now we're seeing a flick up in this Pi Cycle moving average, trying to catch up with price, and that deviation in price, now it represents 28,900. So almost a $1,000 difference in terms of what we saw last month in terms of the price that it represented. So the Pi Cycle moving average is climbing, as is price, but this deviation towards the upside, well, we could still see a pullback into this Pi Cycle moving average for a retest. And if it's a pullback this year, in the pre-halving periods, we tend to see failed retests and deviations below this Pi Cycle moving average, like here as well. In the past, we've seen a lot of deviations in pre-halving years. So 2015, for example, going all the way here, this was a deviation below the Pi Cycle moving average, and then we deviated beyond it, below it, and as the year came to a close, we upside deviated beyond it and then pulled back, but not quite to retest this level and then continue that oscillation. What happened instead was, in the new halving year of 2016, the Pi Cycle moving average started to catch up to price, and then we retested this level as a support, and then in halving years we hold this Pi Cycle moving average as a support until new all-time highs. And you can see that right over here. Once we successfully hold this Pi Cycle moving average in the halving year, we just hold it as a support all the way to new all-time highs. But in the pre-halving year, and this is 2019 and even 2020, downside deviation and upside deviation, downside deviation, oscillation around this Pi Cycle moving average. But once it manages to retest it as a support, and just notice how we upside deviated for the last time in that halving year and never really downside deviated below it again, we just had price consolidate at highs for a while the Pi Cycle just simply caught up to price, and then that's when the retest occurred. And if we flick back here, this is essentially the retesting that we continue to see until new all-time highs. So if we just cycle to this chart, if we see this upside deviation and then we see some sort of pullback, maybe the pullback isn't going to get us to this Pi Cycle moving average. That is a possibility if we see that pullback really complete still this year. But if history is any indication, then we could pull back a bit here and then maybe consolidate a bit, still rally to new highs, consolidate at those highs while the Pi Cycle moving average continues to climb towards the upside, and then supports price on a retest in the halving year. That's one of the possibilities here. So the worst case scenario for price would be to crash into 28k, maybe even downside deviate below it. But that would only be a possibility to look into if this crash is to really mature and complete entirely still this year in the pre-halving year. But if we see a pullback and then consolidation, and then we enter the new halving year of 2024, then this Pi Cycle moving average is probably going to just catch up to price. We still move and enjoy volatility at these highs somewhere but then that retest will support price and hold price essentially to new all-time highs as price continues to go towards the upside after the halving. So 28k, or really just 29k at this point in time, this pi cycle moving average is going to continue to climb towards the upside following price essentially, and that has been the case across time. But one of the things to talk about as well is a target for this current move, because this pi cycle moving average is important, the 111-day moving average, but what's also important is the multiple of this moving average, and this is the 350-day moving average. So not quite a multiple, it's essentially, well, 3 times larger. Also then multiplied by 2, this moving average tends to be a topping out point, and 52k could be that resistance area. So if we think about 52k being the potential topping out area, and it's probably going to be a local top rather than a bull market top like it was in 2019. But the thing about this, as we look at this 2019, this is the pre-halving year. Now we're ushering slowly into the halving year of 2024. So I wouldn't expect a 2019 retrace like this to happen in 2024. Instead, what we should probably focus on is local topping just below this pi cycle moving average or at it exactly, and it's this sort of local top rejection at the green pi cycle moving average that's going to facilitate a drop into the orange pi cycle moving average for a retest attempt, and then holding here as a support all the way to new all-time highs, sometimes being retested, this orange moving average being retested many times on the way to new all-time highs, and sometimes we'll only get a handful of those occasions. And just like in 2021, we didn't see many retests of this pi cycle moving average all the way to new all-time highs. So in the halving year, it's all about timing, really. In the halving year, this green moving average would be a good rejection point and local topping moment for price before reloading then at the pi cycle orange moving average, which is going to be retested as a support. Of course, in 2019, we only saw that once occur, and in the 2020 year, right over here, we got a very small rejection from the green moving average. So this isn't a foolproof strategy, because we can always break beyond this green moving average. However, still, the halving is an important reference point here. If we see a rally into the green moving average before the halving, then there is scope for a rejection to occur back into the orange moving average. But if we were, for example, to see a rejection, or at least this revisit, occur after the halving, as you can see here, well, after the halving, we're probably not going to reject from that green moving average. So it's all about timing, before the halving and after the halving, and also which year. Is it the pre-halving year, or is it the post-halving year? Or at least the actual halving year, because in the halving year, we tend to see retests of the orange pi cycle moving average to new all-time highs, and you can see that across time. But if it's the pre-halving year, then we see oscillation in and around this orange moving average. We see oscillation in and around this moving average. And at the same time, in the pre-halving year, we tend to see rejection from the green moving average. But after the halving, we easily break beyond this green moving average, and you can see that also here as well. So those are the key principles when it comes to the pi cycle moving average. I hope you enjoyed this video. Subscribe to the channel for more videos like this in the future. Like this content if you enjoyed this one, and feel free to check out the video in the top right hand corner for your enjoyment. Hope you enjoyed that video as well. I'll speak to you in the next one. Speak to you soon.